Good afternoon and welcome to the FX Week Ahead live market analysis with myself, Giles Cochran. I'm going to be taking you through the next half hour, looking at the most anticipated scheduled events, as well as the unscheduled events that we need to look out for that will be moving the currency markets. So without further ado, let's get going. And before we do, just as folks are coming in, I'll just say hello. Let's see who we've got. Hi, Kamana, Chris, Ignatius, Kerrick, good to see you back, Kerrick, that's super. And as other folks are coming on, just if you could just let me know if you can hear me okay in the question panel, just type a question so you can hear me so I can know that I'm coming through okay. And don't forget that as the purpose of these webinars is to do with education. Oh, that's great, thanks, Kerrick, that's super. The whole purpose of these webinars are to do with in education. So it's all about you looking over the shoulder of a professional trader and you see the thinking process, how I analyze the market in order to identify where buyers and sellers are most likely to be in the market. So that's the whole idea of these webinars, the whole idea of the workshop that we do tomorrow. What it isn't a signal service where this is where you enter, this is where you exit. These are the trade signals, and it's important because this can't be a trade signal service simply because the market conditions constantly change. So it's far better to be aware of the market conditions and how that's influencing currencies for yourself, so then you can detect changes and you can know when a currency is not likely to go in the direction you first anticipated. So that's the whole idea, and that's that's the best way to learn anyway, so you can make your own decisions going forward. As we look ahead, let's just have a look to see what's happening on Monday morning. And what we do each morning when I'm checking in the markets, I want to have a little look at the equity markets, because the equity markets let us know what's happening with risk. So the Asian equity markets are here from the Nikkei down, and you can see that with the exception of the Hang Seng, the Nikkei, the Shanghai Composite, and the S&P 200 all closed in negative territory. Now, on Friday, there was a news report out that the US might be putting some restrictions on investments in Chinese financial products and goods and services. And that caused the S&P 500 on Friday to close lower. You can see here the lower close, 0.53%. This is for Friday's prices. The NASDAQ was down 1.13%, and the Dow was down -2.6%. Now, as a general rule, when the market starts again, it sort of resets itself on a Monday. You usually have the market sentiment has usually dissipated over the weekend, and then the market sort of reestablished itself. And this morning, what we kind of saw was the market trying to work out which narrative to go with. The Hang Seng and the Shanghai Composite, they're about to be closed for 8 days because we're going to have Golden Week, which is a Chinese national holiday, and we're going to see the Chinese indices close until the 8th of October. So that's just, a holiday to be aware of. And so the market was thinking, coming to this morning, is it risk on? Is it following that story from Friday? There was some reports that the story was not immediately going to be put into place, and there was some denials. So it was all a little bit unclear. And so as a result, we sort of saw a tentative risk-off mode. But then going into the European Open, the European futures, they opened positive. They were sort of about plus 0.2%, some of the European futures, as I was covering it this morning. And you can see they broadly kind of stayed in the green. We got the Euro stocks up, CAC 40 up, DAX up, IBEX up. Portuguese 20 and the Italian FTSE all are currently up on the day. Now, that's kind of a positive move for risk. So what we're trying to work out is, are we in risk on or in risk off? And what this is telling us is that with the markets moving from risk off from last Friday, the US equity market, risk off, broadly speaking, with the Asian market, and now onto kind of a gentle risk on sentiment, but it's not strong. Often markets, sometimes they're completely risk off, sometimes they're completely risk on, and oftentimes there's a kind of a grey area in between where they're neither one or the other, or they're moving from one to the other. So this is a good example. We're kind of moving from risk off to risk on. Remember that this is a little screenshot you can take just to help you when you're wanting to know what's going on with the equity markets, how that affects the FX markets. If we've got stocks rallying, we've got commodities rising, if we've got bond prices falling, and that's bond yields rising, then we're risk on. And in a risk on environment, we see the following characteristics. We see yen weakness, we see Swiss franc weakness, and we see Australian dollar and New Zealand dollar strength. Okay, that's why, as equity traders, we look at the equity markets, because they give us a good lead on certain currencies. Similarly, when the stocks are falling, so you've got commodities falling, bond prices rising and bond yields falling, then we're risk off. And in a risk off market, we're going to see yen strength, Swiss franc strength, and Australian dollar, New Zealand dollar weakness. So that's just, it's such a repeated theme. And particularly I find FX, retail FX traders, they don't know how to do intermarket analysis. And that intermarket analysis is really key, because it can prevent you taking some really disastrous trades, which are going completely against risk sentiment. So for example, if we're in a strong risk off mode, so say for example, Donald Trump suddenly tweets out this afternoon saying, I'm going to increase tariffs on China, then the market's going to go into a heavy risk off mode, and we're going to see yen strength. And if a retail trader thinks, oh, the yen is strong, I'm going to be selling the yen in a risk off mode, then the chances of that trade working out are very, very slim, just because you're going against the whole tide of the market. You're literally going against all the institutional traders, all the funds, and virtually any trader who has any knowledge at all would be, would have this completely understood. It's just second nature to a professional trader. So that's why I want to share it with you guys. That's why I repeat it, and it's through repetition that we gain competence, and practice, as they say, makes perfect. So little screenshot, that's where we look at the equity markets, and that's where we are in this kind of moving from risk off to a gentle risk on mode, and the market's basically trying to decide, and that's what happens. New week, often there's a reset, and that's what we're doing for the start of the session. Now let's go and have a look at what we have for this week. And don't forget, use the question panel. If you have any questions, pop them in the question panel. I'm very happy to answer them. And if you've got any trades you want looking at, very happy to look at that today and tomorrow. So just put that in the question panel, which is on the GoTo webinar control panel. Now, this was the standout event for me at the start of the week, which was the ANZ Business Confidence. Now, business confidence is an important metric for the Reserve Bank of New Zealand. The Reserve Bank of New Zealand uses this data point as a guide to help them set their interest rates. So as a result, it's very important. Now, the actual reading was minus 53.5. Now, anything below zero is negative. So you can see, look, the trend here has continually been down for business confidence. It's really dragging down the New Zealand dollar. Now, a couple of things to say. The first thing to say, this reading was very low. It was the lowest reading in 9 years. Okay, so in 11 years. So you got to go back like 11 years before you get a lower reading. So you got to go, right back here. 2008 was the last time you got a really low reading like this. So that is an exceptionally low reading. Weighs heavily on business confidence. But also remember, the key trade in the market is understanding context. It's like everything in life, isn't it? It's all about the context. And I'm going to show you on the New Zealand. I'm going to look at the New Zealand dollar. I'm going to look at the. Just bear with me one moment. I'm just going to pull together a chart, and I want to show you what we were seeing with the New Zealand dollar last week. Okay, so Reserve Bank of New Zealand Governor Orr had been saying at the end of last week that he didn't see any need for the RBNZ to use unconventional monetary policy. Okay, so in other words, they were saying like interest rates are okay. We don't think we're going to be using unconventional monetary policy. In other words, the message was, you know, things are going okay, right? And that kind of things going okay message came across, and so the market was buying the New Zealand dollar into the end of last week. Okay, so you'll see some of this. So you see from last week, you know, we saw bids on the New Zealand dollar and using US dollar pair. Okay, so now with this very low business confidence, some of those bids are now turned into, those buyers turn into sellers. So given how much the Bank of New Zealand relies upon this data point, it's important for them, and given the fact that it's an 11-year low, we can expect to see New Zealand dollar sellers for this session. Okay, so for about the next sort of 16 hours, we can expect to see New Zealand dollar sellers. So one pair that I was looking at this morning that is worth looking at is the New Zealand dollar Canadian dollar pair, and I was looking at this pair. Let me just, I was looking at this pair here. Oh, it's disappeared. Come on, come back. Right. Now I was looking at this level here, the 0.83162 level. Okay, I'm expecting sellers there, and I'm expecting sellers here at the 100 exponential moving average, or about 0.8340. So anywhere, so from here to here, I'm expecting sellers. Okay, I'm expecting stops to be above the recent highs, 27th. Yeah, I'm expecting stops above Friday highs here. So that would be the kind of, you know, my analysis is wrong level, really well anchored below Friday's lows, okay? Friday's highs rather, okay? So the Canadian dollar, I'm expecting the Canadian dollar to be bid because there was some positive news out for the from Alberta government that was supportive of Canadian dollar. So we've got weak New Zealand dollar, strong Canadian dollar. So expecting New Zealand dollar, Canadian dollar sellers on pullbacks. So that's my outlook, looking what I'm expecting sellers to be coming from for today, right? As I said, but that setup was from that ANZ business confidence. Now the manufacturing PMI was slightly better for China. Remember, the big concern about China, and it is a big concern, is that if China slows down, if the US and China have a trade war, then that's going to be disastrous for the whole world. So that's why the US-China trade war issue is really a global growth issue, right? So US-China, between the two of them, make 40% of the world's GDP. So going back to the data, so if the PMI manufacturing, in other words, if manufacturing is slowing down in China, that's bad news. That's showing global growth is going to slow down as well, essentially. So that's the reason it's given such a focus by the market. Now, that was an okay reading. Now, the Caxin manufacturing PMI, this is the difference between the two. This PMI is your big companies. And remember, China doesn't work like a kind of a Western state. You know, a lot of the big companies are state-run, they're state-owned. So it's a total different system. Now, this is a lot of the big state-owned data, and this is the private smaller businesses data. Okay, so these smaller businesses are showing quite a nice uptick. So that's part of the reason. If you notice, going back, you'll start to see how this all goes together, fits together now. What you'll see is the Hang Seng composite was supported a little bit, and it was supported a little bit on that decent PMI data. Okay, so that's you know, that's buoyant news. That's why we've got a bit of a mixed mood here in the market. Now, coming into the European morning, we had a whole series of CPI releases from Germany. Okay, and we had German retail sales 0.5% as expected. We had German inflation data, and that German inflation data is basically the whole. Here it is, right. So it's confusing me. It's different to the Reuters terminals. It's not set out very clearly. Okay, like this German CPI data showed a month-on-month reading that was pretty much as expected, but the year-on-year reading has fallen. And if you notice, you'll see that the euro has broken out of the 1.0900 level. Okay, so there was nothing really surprising in the CPI data, but it's just showing, you know, inflation is slowing down, so it's not great for the Eurozone. But there wasn't anything massive surprise. That move came later on Donald Trump's tweet about, you know, either we will get a deal or we won't get a deal done. So we saw some US dollar strength. It's also month end. So on the end of the month, we have different flows that are taking place as just, you know, companies are moving their money. There's rebalancing going on. So there can be some confusing flows, because they are literally just flows. It's just money being moved around for the end of the month, as you expect. Everyone knows, you know, if you get paid at the end of the month, there's money coming into your bank account at the end of the month. Same with companies, they're moving money because of payments, they're shifting things around. So there's month-end flows. Okay, we had some GDP data out of UK. Nothing really here, because what it's all about here with the UK is Brexit, of course. Okay. Now, the main event that I'm looking at for this week, and one not to miss, is the Reserve Bank of Australia cash rate. Now, very interesting here. The Reserve Bank of Australia is expected to cut their rates, but I could easily see Governor Lowe surprising the market this rate meeting and not cutting rates. So a little test for those of you guys who are regularly following me and learning this. If the Reserve Bank of Australia doesn't cut rates, if the rate remains at 1%, what impact will that have on the Australian dollar? Put it in the question panel. Excellent, Haider, very good, well done. Let's go see if anyone else is. Yeah, Carrick, superb. That's exactly what happened. Remember, this is all about expectations, okay? So the expectations are for the Reserve Bank of Australia to cut rates. So if they don't cut rates and they keep rates the same, then we're going to see the Australian dollar rise rapidly, okay? And certain traders, sentiment traders, would be entering immediately on that release. So if you can be there and around, that's a great event to be trading, because if the interest rate decision is that the rates are not cut, we're going to see immediate Australian dollar strength, and that strength is likely to last for, you know, a good few hours. Okay, so, you know, traders will be looking to go long the Australian dollar if the RBA don't cut rates, and then it'll depend on the rate statement, and then it will depend on, you know, after the event, and if you can't get up for the event, then look for a retracement. And I'll give you a little clue how traders easily look for a retracement. Let's just use a hypothetical example, okay? It literally doesn't matter. I'm just going to let's just say for the sake of argument, now I know this isn't the case, but say that this was an interest rate decision, okay? And say like there was an interest rate decision, the New Zealand dollar, let's just say they raised interest rates, okay? And it was immediately upside in the New Zealand dollar. And let's say you came to your desk and you were about, you came to your desk here about sort of, good 3 or 4 hours afterwards, and you thought, oh, I wanted to get into this move. Now, the simple way to get into the move that's very easy, and I'll just share it with you. All you do, put your fib retracement level on, right, and just look to enter a 50% retracement, okay? And the general rule is take profit up at the recent highs. Okay, so there, that's like a, that's a sort of 40 pip move. Stops below recent lows, and you just trade it. Now, that is the sort of thing that I'll be looking at if there is a interest rate surprise. Okay, so it's 5:30 a.m. my time. Now, I will be up for that. So if there's a big move, I will hopefully be in on that. So that's one to look out for. We'll governor low speaking as well. So if there isn't, if everything is as expected, don't forget the comment of low is important at 10:20 a.m. Got GDP out of Canada. Remember, the Bank of Canada is a bullish, well, hasn't explicitly become dovish central bank. So the market's always looking to see what the Bank of Canada's move is going to be. Manufacturing PMI out of US, that's quite a good expectation, 50.4. So expecting some dollar strength into that. We have the non-farm employment change. Oh, sorry about that. We have the non-farm employment change on Wednesday, October the 2nd. And we have crude oil inventories on at 3:30. Now, the next event after that, okay, non-manufacturing PMI above the 50. So there's some pretty good US data coming out. Retail sales out for the RBA. Again, that will be important depending on the rate meeting on the Tuesday. And then Friday, we've got non-farm employment change, expected 140, unemployment 3.7%, average earnings at 0.3%. So generally speaking, there's some dollar strength expectations. Now, they're the scheduled events. What about the unscheduled events? Well, some of the unscheduled events to look for tweets from Donald Trump. Okay, if Donald Trump tweets anything negative about US-China trade war, then we can expect to go into a risk-off environment very quickly. So watch out for Donald Trump's tweets. Also, watch out for any Brexit risk. There is considerable political risk at the moment. There's a lot of upheaval and uncertainty in the UK concerning the path of Brexit. Boris Johnson is determined to deliver his no-deal Brexit on the 31st of October. Deal or no deal, rather. He is focused on delivering that. Now, the opposition, Boris Johnson is the Conservative Prime Minister and the leader. The opposition, the Labour opposition, and the Lib Dems, the other political parties, are desperate to stop Boris Johnson. So there's a big fight going on in the UK Parliament. Boris Johnson is determined to force a no-deal Brexit on the country if necessary, and the opposition MPs are determined to not let him do it. So there's an act called the Ben Act, and the Ben Act is basically an act that forces Boris Johnson to ask the European Union for a Brexit date extension. Now, Boris Johnson doesn't want to use it, so he's going to try to not use it if he can. So there's a lot of volatility potentially for the pound. So just watch out for that. It's the Ben Act you need to watch out for, okay? It's the Ben Act you need to watch out for. If the Ben Act is, changed, that's liable to move the pound. So watch out for any data points like that. And again, remember, if you miss a data point, so Kerrick, I've got your advice here. Kerrick asked one of the questions. He says, what advice would you give New York time traders when it seems most of the moves happen in the Asian and London session, especially those trading purely based on sentiment? Sentiment always seems to fade going into the New York session. Now, sentiment ebbs and flows. So it depends on the sentiment, Kerrick, but often if the sentiment is very strong, you will often get a second chance to enter the trade, often hours after the original event. So what I would say is, first of all, you do get sentiment changes in the New York session. I know traders who trade the New York session, and they're very pleased with their trading in that New York session. They're able to trade that session in and of its own. But say you come to the New York session and you see a big move on the London session. So let's take the one today, Kerry. that we looked at with the New Zealand dollar CAD. Okay, so let's take that. So here's New Zealand dollar CAD. So we come there. And, you know, you look at this, you see, where's the 20? Okay, there's the 27th high, right? You know, you're thinking, okay, I can see that New Zealand dollar is going to be sold. I think CAD's going to be strong. If you'd entered right down here at the start of the London session, look, you know, you would have been in drawdown all this time. And actually, coming to it now, you're thinking, okay, I could potentially short from this level, I could potentially short from that level, and I could play down towards recent lows. Okay, so obviously it's not trading advice code, but there's an example where there is an opportunity to enter in the New York session, you know, a trade that I'm potentially looking at getting into. When I finish this webinar, I'm going to get up and have a little look at it. But that's a potential short, and that's just happened in the New York session. Now, whenever sentiment is very strong, you often get a pullback, okay, and that pullback can be the opportunity that you're looking for. That's the main events really to look for this week. And as I said, the real one you really don't want to miss is this RBA rate statement on Tuesday. That could be a real big, strong mover. So that's one definitely for you to watch. And the other thing to say is that there is an offer that is run by HYCM that I want to let you know about. You see, there's a landing page which I'll send to folks here, which gives one-to-one coaching with traders. So if you wanted one-to-one coaching, you just go to this landing page. You can have a little look at it, and I'll send you the link. But basically, if you deposit $1,500 into the trading account, you will get a 1-hour coaching session with myself. If you go to the pro level, you get $3,000 into your account. You obviously deposit $3,000, and you get 1-hour session, 1-hour follow-up review, and you get more with the $10,000. Now, this isn't money that you pay, so it's not like you pay this money to get the coaching session. This is your money that you deposit, and then you get the coaching session with me as part of HYCM wanting to help traders in order to to develop an understanding and skill of how to trade the market. So this is an excellent offer, and the reason this offer is linked to the webinars is because it's the webinars where people are going to start to show an interest in trading. So if you've got an interest in trading, an interest in education, and you're serious about the steps you need to take to learn to trade, then HYCM saying they want to match that commitment with these following offers. I'll send that to you folks, so you've got that. That's it. Now the questions that we've got. Chris, what are the factors affecting gold? Haven't got time to look at that now, but essentially the big factor impacting gold, Chris, is low interest rates. When interest rates are low around the world, gold shows a value. Look at the gold chart. You see it's been being bid over the last few weeks. As the central banks around the world are going negative on their interest rates, then gold suddenly has a value again, because typically you don't get any benefit for holding a gold position. You don't get a dividend, not like a coupon for bonds where you get a yield. No, gold just has the value in itself. And if you hold physical gold, it actually costs you to store it. So when negative interest rates are coming, then where do people put their money? Gold all of a sudden is attractive. So that's why gold buyers, I'm expecting to find them on pullbacks. Kerrick, we've done your question. I think that's the question. What about euro, US dollar? Yeah, euro, US dollar. Well, we've got that breaking out of 1.0900 I last looked at. Yeah, it's at 1.0899. We've got a very large option expiry level at the 1.0900 level. That's worth looking at. Hashik, let me just check. I'm just going to go to the... Where is my Right, let's look at that because this is a good learning point. Thank you for bringing it up. This is helpful. Right, euro US dollar. Now, at the moment, you see this level here, the 1.0900 level. There is at this level a $2.3 billion option expiry level, which will expire at 2 o'clock GMT, which is 3 o'clock British London time. So these option levels are very huge. This is a huge level, 2.3 billion. So it's going to be defended. It acts as a magnet. It draws price to it and it pushes price away from it. That's the way these option levels work. Okay, so you can see that the option level has drawn the price down to it. Now, when the option level expires at 3 o'clock, you're liable to see a second move. So in about an hour, we might see a second move. So what you're looking at is the price action around these levels. So if you see price break back above and sort of start showing tailing action, buying action off there, then you might expect further euro US dollar upside. If you see, price moving here, then 3 o'clock, you see price try to fail, put a big reversal bar in there, then I'd expect a potentially more downside. Now, I'm not trading this. Okay, this is not something that I'm trading, but it's just a good educational level for you on these option levels. You can see we're breaking out of these recent lows. You can see that this is a key level, key daily support level. We had like a false break of that level within the last week, and now we're seeing another attempt at a break of that level. Okay, so there's the level. We've got the option expiry level marked in. We've got the key support and resistance. So you can see price moving away from that level, but that's the key thing to look, and it's dollar strength. And there's reports of dollar strength into month end. Okay, so that's, Eurozone is pretty negative. US dollar strength, we've got the option expiry level here. There's some of the factors that are looking at Euro. I'm not trading the pair at the moment, Hashik, but that's some of the key things to be looking at for it. Okay, guys, it's been a pleasure. Don't forget, tomorrow, here again, 1 o'clock GMT time, we'll be looking at the workshop, and we'll be looking at, pairing up weak currencies, strong currencies, and we'll be going through in more depth some of the things we've mentioned today. If you didn't get a chance to have your question answered today, come back tomorrow and give your question. We can look at some trade setups. So if you've got a trade you're looking at, something you want to consider, bring it along to tomorrow's session and we can take a look at it. Okay, guys, you have a great week. Thanks now. Bye.